Well, we've got a big U-turn being seen on the markets, or taken by the markets. The JSE tracking Asia to open higher this morning. The market currently trading 2.5% to the good. But as I was saying earlier, many labeling it a knee-jerk reaction to the world failing to come to an end last night, and the reversal not expected to last too long. Your take on the kind of activity we're seeing right now?
Yes, well, it's a very difficult trading environment in the last few weeks, Alishia, and what happens is that everybody's waiting now on policy numbers rather than economic numbers. So they're waiting for policy out of Europe, and when something comes through which is relatively positive, ECB taking quite a good stand, saying that they will come forward with extra funds. The market turns around very quickly. A lot of shorts in the market waiting for that, as you say, the world to end, and they cover very quickly. And when they cover, you get a very big bounce in the market. So a lot of short covering coming in today, and a little bit of genuine new buying as well.
To what extent are you still exercising caution, Rob?
I think you have to show caution in an environment where you have to wait for politics to make and policy to make the call whether the market's going to go up or down. So, when you have these big pull downs, I think that you do start to nibble and buy a little bit of the stocks. Some of the banking stocks have been hit really hard in South Africa. Some of the big general miners hit really hard, and you start to buy a little bit of stock at those levels. But you can't take a really substantial position at any stage until we get some clarity from Europe.
One would assume that holds more true for the financial arena, where you're saying that you are seeing some opportunity. I know that when we were chatting off air, you highlighted Investec and Old Mutual among the stocks that are on your radar screen right now. But again, to reiterate that it's a nibble that you're taking at these stocks right now until clarity emerges over in the Eurozone territories.
Yes, I think both of those stocks have got obviously a big impact in what's happening overseas, and obviously their holdings are Investec, big holdings in London, and obviously Old Mutual based in London as well. So they've been hit extra hard, waiting for the Europe to collapse, and I think it gives you opportunity to enter into those stocks. If things do settle down, I think they'll recover very well. You can see a really good return on your investment there.
There, where you're seeing some opportunity, Rob, where exactly are you steering clear from when it comes to market exposure on the equity side right now?
I think with the markets on the local side, the retailers are still very highly priced, and I would rather stay away from those at the moment. I think not that I expect them to crash excessively, but very fully priced there, and I would rather be staying out of the retail. I would buy and shop right at 117 or 120 rand. I think there's better things to buy, so I was staying clear of retail at the moment.
So not enough of a leg down coming through on those retail share prices. What about the likes of an ArcelorMittal? We know that share price over the last month or so has lost about 8%. The last couple of sessions managing to recoup some of those losses, investors piling in. And we saw yesterday that some news coming through with regards to it scrapping its BE transaction.
Yes, I think still trading below 60 rand. So, 2 years ago they were 180 rand. And they've battled to find their feet ever since. I think that the steel industry in South Africa is a very difficult industry, but at these levels it is starting to show a little bit of value. The BE transaction is quite an interesting one, whether by pulling out of this BE transaction that tells them that they won't be going in for ITC, and they'll have to go to arbitration for the Sishen mine. So quite interesting to see what happens there with that BE transaction. But at the moment it helps him with funds. They won't be having to fork out for that BE transaction. So all in all, it's starting to show a little bit of value, but a very difficult sector in South Africa, the steel industry.
While we've got ArcelorMittal pulling back from a possible transaction, we've got First Rand forging ahead, and that when it comes to its expansion plans, specifically in India, now moving more aggressively into the retail banking arena. What have you made of that news that's come through? Because we know that it has been in the pipeline for a long time now.
Yes, obviously all banks in South Africa are trying to look for growth and moving outside of South Africa, firstly obviously into Africa, and now foray into India. I think it's a very difficult market. We saw Shoprite went into India, and they got their fingers burnt and had to close that business down. And a lot of it is because a lot of the business in India is very held by Indians only, and they're not very easygoing with foreigners. So they've said that they will make a concerted effort to open up the banking industry. And I think if you are first in there, it's a good move for First Rand to be there. They open a whole subsidiary, so it's a good foray. And an economy that's growing at 7.5% a year, which looks like we'll carry on growing at about 7.5% a year for the next 3 to 4 years. So definitely growth available in India.
You touched on earlier the fact that you're looking at the likes of an Old Mutual and an Investec as well. Within the banking sector specifically, what exposure are we looking at from your end to that space of the market?
I think you can look at the banks. I think they've also battled over the last few months, and they're coming off very, very low levels. The bad debts have started to improve. Unemployment in South Africa is a problem, and that can also lead to bad debts increasing again. So we have to take a look at how much bad debts are coming onto the bank's books, or if it's still reducing. If it is still reducing, I think that you can look at all of the big 4 banks in South Africa. Standard Bank at the low 90s is a good level. You can pick up 5 to 6% over the next few months.
Let's end off with a view on the top performer on the top 40 today. It's standing as Exxaro. We're up just over 5% on that share price, and this after we had an announcement yesterday from the company saying that it's looking to dispose of its mineral sands business specifically, and that to a US pigment producer, all in a bid to enhance efficiencies and reduce risk. Rob, it seems the market's reacted positively to it. What have you made of that news?
Yes, it looks like they're ring fencing that mineral sands and creating a separate company from there. I think they'll still have ownership within it. It looks like a very good deal for them. They'll get cash flow in, as well as separating the mineral sands from their other businesses. It creates a $27 billion company in total. So I think it really good for the mineral sands, which is a difficult mine for them at the moment, and something that sits, it's not their core business. So it looks very good. Obviously, the market thinks it's good as well.